Bismillahirrahmanirrahim. Welcome back once again. Students, I hope that you have learned a lot with my previous session and strongly suggest you have to apply all these rules with your SBR practice questions from September 18 onwards. Now it's time to start question. Let's start it. Question named Chuckle, Specimen 1, published by ACCA. Students, we will cover the question Chuckle with that agenda. It's mentioned on the screen. Step 1 to step 7. Let's start with step 1. Step 1, that is about reading of the question. Every moment of the exam is investment. Is investment. You must consider every minute is your investment. So reading of the question, whatever the time you will spend on reading of the question, it's actually you need to invest your time to get the benefit. That's why I mention here reading of question is an art. Some important point while you read the question during the exam. Number 1, always start reading your question from initial context. Initial context means the background of the question with the main screen. First, read the main screen details, the background of the question, and read the requirement there. Initial context and the requirement of the question basically will support you to develop initial mindset of the question. And based on this initial mindset, read the complete question and develop your complete mindset. Mindset means understanding the examiner requirement, what examiner expect you. So 3 steps you need to follow. Number 1, initial mindset by reading initial context and the requirement of the question. Then read the complete question based on the initial mindset. And finally, read the requirement at the last point and fix your mind that you have understand exactly the examiner expectations. During reading, yes, highlight the key points and then move on to plan the second part. Mind mapping, that what you will write and all these things. We will cover the point later on. Now let's start the reading of the question. This is the question. I strongly suggest here, if you are watching that video, you have to pause the video here. If you really wanted to get advantage of this video, pause the video and read the question based on the guidance I just provided with you. Read basic. First, the background, which mentioned with the data screen. Then requirement, read the requirement and read the complete question. And once again, read the requirement. So I strongly suggest you have to pause and do it now. So let's start. I hope that you have done this. First, what you should do, Chuckle company, read the background. Chuckle company has equity interest in several companies, including Green Company. So investor is Chuckle, and Chuckle has made the investment in Green Company. So question is about investment in Green Company. Number 1, directors of Chuckle Company have prepared incorrect spreadsheet of consolidated balance sheet for April X6. So it's very clear the question about consolidated balance sheet and the formatted mention exhibit 4. All goodwill other than that relating to GRIN has been impaired. Financial year end 31st March. The following exhibits available left hand side with the details. Number 1, initial acquisition of GRIN and initial purchase 30%, 1st April export. Then subsequent acquisition of GRIN 18% with and plus the share option. It's very clear the question, something balance sheet, something about associate, something about step acquisition. Then some fair value adjustment and something about draft balance sheets. So basic mindset, it's very clearly developed. Further, you need to develop initial development of the mindset by reading the requirement. Using exhibit 1, A1, discuss why GRIN should be classified as an associate, not a subsidy. So it's about something, why associate, not subsidy. So it's something about the discussion of associate subsidy like this. Initial mindset. A2, exhibit 1 only. Explain how GRIN should be accounted for an associate using equity method in the consolidated balance sheet at 31st March X6. So A2 is something about associate accounting. B, exhibit 2, explain briefly why classification of Chuckle investment in GRIN should change 1st April to that of subsidy. So additional investment, why need to shift from associate to subsidy? Using exhibit 2, explain briefly how additional purchase 18% should be accounted for in the consolidated balance sheet. So C1 is about accounting. C2, using exhibit 3, explain how fair value non-current and current asset 1st April X6, including deferred tax adjustment, should be calculated. That's the point. Fair value adjustment including deferred tax. And C3, using pre-populated spreadsheet option. And exhibit 3 and your previous answer, adjust the spreadsheet prepared by Chuckle in order to corrected consolidated balance sheet. Taken into account these 4 points. Associate accounting, change in classification from associate to subsidy, fair value adjustment, and goodwill by proportionate method. That's a point. So a good, before entering the main contacts, by reading these 2 things, we have developed a basic mindset, the question about associate, step acquisition, subsidy, that's balance sheet, all these things. Now, entering into details. Now come on, very focused, be careful, be attentive. Now come on. 1st April X4, Chuckle acquired 30% equity, 30% equity shares in GRIN. Okay, 1st April X4. By the way, our balance sheet date is 1st April X6, 2 years ago from the balance sheet. The consideration consisted of 100 million cash, carrying amount of net asset of GRIN company, 1st April X4, 286 million, which was same as fair value. Since then, GRIN company have been stated at cost in the consolidated balance sheet. This is the important point. Chuckle has stated the Grin company investment of 30% in the consolidated balance sheet at its cost. But the question is that this 30% investment, how to treat in the consolidated balance sheet. That's important. Here, the remaining 70% of the equity of Grin, 1st April X4, was owned by few other investors, none of which owned more than 10% of equity of Grin company. So that is something about the discussion related to IFRS 10 as well. Because with IFRS 10, the guidance provided with IFRS 10, it's about control. It's control. And for control, there are some definitions here. Power, rights of variable returns, and so on. And then some cases are very simplified. That's if more than 50% sharing, no worries, but less than 50%, we need to consider other factors as well. Especially if we invest 30%, so what about the other shareholders? We need to consider. So here the game. The remaining 70% by other investors, which own 10% equity of Grin. The question is that these remaining 70% and each of 10%, are these other shareholders are scattered, dispersed? That's need to consider. Further points, analysis shows that all shareholders have voted independently in the past. And there have been no clear past voting pattern. No clear past voting patterns, suggesting that Chuckle is unable to directly influence the economic decisions of other investors. That's a very critical point. Chuckle and Grin share some key management person. That is also relevant because if only consider the sharing of key management personnel, that's something the reflection of control. But if you consider the green highlighted, the Chuckle unable to influence the economic decision making, it's not about the control. So we have to we have to adopt the knowledge of IFRS 10 something and apply the knowledge with the case and conclude with our judgment. Okay, the carrying amount of the net asset of Grin 31st March X6 348 million, and the increase in net assets since acquisition was solely due to profit, and this will beneficial with respect to equity accounting, movement of the net assets. Grin company has paid no dividend since 1st April X4. So that is the point. So that's the first exhibit, initial acquisition of Grin, support with the requirement number 1, A1. Okay. Then furthermore, subsequent. Now come on, be attentive, very focused. Reading of the question, it's very important to exactly understand the requirement of the examiner expectation. Chuckle company acquired further 18% Grin company equity 1st April X6, means after 2 years. Remaining 52% of the equity of Grin 1st April X6 owned by further other investor, and none of which own more than 10% of the equity of Grin. 1st April X6, Chuckle company has also acquired some share options in Grin company exercisable anytime 31st March X7. Now the relevant point that's need to jot down in your mind. Previously have 30% in Grin, further 18%, it's total 48%. So exactly with the percentage, Chuckle not able to get more than 50% right, more than 50% vote, which are voting rights. But other factors need to consider. That's called share options. And we need to consider the share options as well. There, about share options, IFRS 10 also provides a guidance here. The exercise price of the option was just above the market price of Green company shares. Although Chuckle has also acquired share option, but right now it's not valuable because exercise price above the market price. Green company has been profitable in number of years and share price has been on upward trend which is expected to continue. But in future they are expecting the option become exercisable. And Chuckle would increase its ownership to 60% should it exercise it. If it's become exercisable, then Chuckle will be able to get 60% total rights. So this green highlight is very important to consider about the control aspect in green company's equity. It is believed that there will be additional cost saving. Further point, additional cost saving should the additional shares be acquired as decision at the board level could be made more efficiently. Means acquisition of green, it's valuable for both shareholders. That's having some cost saving activities, some synergy aspects. So this is the point for additional 18% addition. Further, another important point, the director of Chuckle company have prepared a spreadsheet of consolidated balance sheet. 1st April XX. That's they have already prepared the consolidated balance sheet. And what I suggest, you can refer this spreadsheet now. This is what the balance sheet mentioned here. Drafted consolidated balance sheet. This is consolidated balance sheet. Huh? Here you don't need to make consolidation. You need to make adjustment in the consolidation. You remember, this is consolidated balance sheet. In consolidated balance sheet, that's property, plant, equipment, investment associate, further investment, that's 166. Goodwill, other than Grin, all goodwill impaired, but the Grin goodwill is missing here. Other non-current assets, current assets, share capital, other component equity, retained earning, NCI. NCI is missing here. NCI is missing here. That is the point. Okay, sorry. It's missing here. But here mentioned Grin's equity. Grin's equity. What the Grin's equity is doing here? In the equity side, something error. We will consider deferred tax, current liabilities. And here mention the workings. So we will show the working here. Okay. So this is the balance sheet. Directors of Chuckle have prepared a spreadsheet of the consolidated balance sheet, a consolidated statement of financial position, SOFP. 1st April 6, Exhibit 4. Now, investment in Grin have been stated cost 166. And the net asset of Grin have been included at the carrying amount. Okay. The equity net assets of the Grin have been included at the carrying amount. The net equity of the Grin company has also been included in the balancing. So these points are very important. That's cost, investment in Grin mentioned cost 100 plus 66. Net assets have been included in the carrying amount, means asset and liabilities. And equity balance incorporated here. The consideration of further 18% of Grin 1st April is included in SOFP as the cash of 66 million. HB also referred that 66 million they have already incorporated further. That's the point. 66. The fair value of the original 13% was 27. Here mention the fair value, but it's not reflected in the balance sheet. It's not reflected in the balance sheet. Carrying amount of the net asset of Grin Company 1st April X6 were as follows. Non-current asset, deferred tax liability, current liabilities. That's the carrying amount of net asset with these values. Now, included in the non-current asset, some land, and the carrying amount of the land 1st April X6 $50 million, but its fair value assessed 60 million at that date. Current assets include finished goods with a cost of 84 million, and the fair value of these goods $131 million. So something about land, something about inventory. There are some fair value adjustment here. 1st April X6, director of Chuckle also identified internally generated database of customer who were likely to be interested in purchasing their products. Focused. Don't lose attention. Focus here. Once again, 1st April X6, directors of Chuckle also identified that Grin had an internally generated database of customers who were likely to be interested in purchasing their products. Although there were no contractual or legal rights associated with database, a professional expert estimate that competitors of Grin Company would prepare $5 million for this database. Grin has not recognized database with individual financial statement. With respect to individual financial statement, that was right according to IS 38. But in consolidation, if the value become identified, that we need to incorporate as fair value adjustment. So 3 fair value adjustment: land, inventory, and database of customer. And make a deferred tax adjustment. Tax rate 20%. This rate should be applied to any fair value adjustment deemed necessary. It's very categorically mentioned. Chuckle made NCI as a proportionate share of net asset at the date of acquisition. This is exhibit 4. This is exhibit about fair value. And the drafted consolidation. And the drafted consolidation. That we need to adjust. And that is what about the reading of the contracts. Final, at last, read the requirement once again, last, and ask yourself, have I got the complete understanding about the requirement of the examiner? Number 1, use Exhibit 1, discuss why Grin should be classified associate, not as subsidiary. Here, the 4 marks requirement, it's not just about that why Grin classified associate. Here the requirement, why not as subsidiary, the requirement is. So we have to draft draft answer by referring not as subsidiary and conclude with associate. Not only to draft answer as associate. So that is the first requirement. Number 2, BA2. Explain how grant should be accounted for associate using equity method. It's very simple, straight, 3 marks. 3 marks. How associate should account for equity accounting at 31st March XX. Explain briefly why classification of Chuckle investment in Grin should change on 1st April to that subsidiary. Once again, the reference of IFRS 10. Based on this, why Grin investment in Grin become subsidiary. 3 marks. Explain briefly how additional purchase 18% should be accounted for in CSFP. So this is step acquisition adjustment. Adjustment and start with the consolidation accounts. Explain how fair value of non-current asset, current asset, including deferred tax should be calculated. 6 marks. This is what about the fair value adjustment including deferred tax, not only calculate but also to explain. And finally, pre-populated spreadsheet option, correct the consolidated balance sheet. Correct the balance sheet using exhibit 3 and all previous answer. Simple meanings, with considering all above answer, all above requirement, adjust the consolidated balance sheet. Means consolidated balance sheet available, but having some errors, you need to show the adjustment of errors and redraft the consolidated balance sheet. And here examiner mentioned the scope of correction. This is what scope of correction means. Correction you need to make accounting for associate using equity method, change in classification associate to subsidiary, fair value adjustment, and goodwill using proportionate method. And calculate the NCI. So 12 marks question with the pre-populated spreadsheet response option, and we will make correction with this scope. Examiner here mentioned the scope of your correction of error. It's very simple. Now it's time to attempt the question one by one. It's not possible to start the question with the calculation. We have to start the question from the requirement 1. So this is all about the reading of the question. That's all. Thank you very much. Wait for the another video. Assalamu alaikum.